Tax final year student from Bhopal School of Social Sciences. Firstly, I would like to introduce you to my team.
I am Arnav Dubey from BCom Taxation final year.
I am Amit Gulani from BCom Taxation final year.
I am Kishan Chandani, BCom Taxation final year.
I am Bharat Sharma from BCom Taxation final year.
Kosh Mulok Danda. Treasury is the root of administration. Well said by Kautilya Chanakya. The topic of our model is tax planning, tax evasion and tax avoidance. So let's us begin with tax planning. Tax planning is the legal way of reducing the tax liability of an individual in such a way that he or she is liable to pay the lowest tax possible. Now let's come to the model. This part of the model represents the bridge, which is representing 5 heads of taxable income of an individual. That is income from salary, income from house property, income from business and profession, and income from capital gain, and at last income from other sources. After crossing the bridge, we arrive at our first station, that is gross total income of an individual, from where the journey begins and the person boards the train. Thereafter, these other stations represent deductions, various deductions which are available to an individual, which is 80C, 80D and 80E. And after crossing all these stations of deductions, the individual arrive at the final station, which is the taxable total income of an individual. Now my friend Anuja Gupta will help you to understand various significant points regarding deductions.
So firstly, we will start with the deduction under 80C, which is a deduction in respect of life insurance premium, NSC, mutual funds, provident fund, etc. So deduction under 80C shows us a variety of deductions that come under it. The maximum limit for such is 1,50,000. It includes LIHC, life insurance premium, mutual funds, NSC, savings, National Savings Certificate, employees' contribution to SPF or PPF, and contribution to PPF, which has a limit of 12%. So let us move on to deduction under 80D. Deduction under 80D is a deduction in respect of medical insurance premium, which is offered for self-spouse children and for parents. It is actual amount paid or 25,000, whichever is less. So, deduction under 80E is a deduction in respect of interest on educational loan. Deduction under 80E is the deduction in respect of interest on loan taken for higher education. In this model, we have represented a graduate who has secured educational loan and claiming deduction for it. So next is deduction under section 80G, which is a deduction in respect of donations to certain fund, charitable institution, government, etc. Under which there are 2 varieties, which is qualifying amount and one without it. The qualifying amount is computed by taking the GTI or gross total income, then deducting long-term capital gains and deduction under 80C to 80U except 80G and 80GG, and then finally we arrive at the adjusted GTI or adjusted gross total income, and then 10% of which is considered qualifying amount. So next we have deduction under section 80GJ8, which is a deduction in respect of profit and gains from collection and processing of biodegradable waste for power generation. We have shown in this model a whole model of how power generation is done through different steps by first biodigestion, biogas, and then producing electricity. So next in line we have deduction under section 80TTA, which is a deduction in respect of saving bank account and post office saving bank account. For saving bank account, we have an exemption limit of 10,000 rupees, and for post office saving bank account, we have an exemption of 3,500. So next we have deduction under section 80U, which is a deduction in respect of person with disability. It has a limit of 75,000, and in severe disability, it is 1,25,000. We have come to an end of a long journey of various deductions offered to an individual. We finally arrive at the total income, and then we have a variety of tax slabs. Then we arrive at tax liability of an individual. Now we come to an end to tax planning. Further, my friend Kishan Chandani will tell you about tax evasion and tax avoidance.
Moving on, tax evasion. Tax evasion is using illegal means to avoid paying tax. There are many illegal practices that people follow to evade tax, but we have taken 5 of them, which are storing wealth outside the country, bribery, smuggling, failing to pay due tax, And last, not reporting income. We have also shown different penalties and charges levied on individuals who follow such path. Some of them are severe and even attract jail time. Finally, tax avoidance, which is a legal way to reduce tax liabilities by finding loopholes in the tax system. The line of demarcation between tax planning and tax avoidance is very thin and blurred. There is an element of malified motive present in the tax avoidance. We have used this building as a tax system, and the cracks in it acts as a loopholes which people exploit to their own advantage.
So this was all about our model on tax planning.
Tax evasion, tax avoidance.
Thank you.
Thank you.